So there's supposed to be two. There's only one. Videos, and then we're going to go to the old video, and there she is right there. Are you ready?
Hi, I'm JC, and me, as you being part of my internet website club thingy, which my dad doesn't let me calling it that, but I do. Being part of that, you're going to be getting weekly lists of stocks that I'll be trading, and every month you'll be getting 4 lists of stocks that you can choose from that'll help you get the best return on your money.
That's me either. The hell is
List
all
number
my
1
words?
is stocks that are paying out each year, I think. And then list number 2.
Well, there's the princess right there. It takes the fun out of it if you can't hear it. Me. Alright, so I got to figure out. Now, my son did come up the other day to help with, what's going on. So there's a possibility.
Seriously.
What a goofball.
I
Possibility.
think just one company per month. Just one.
For some reasons.
Anyway, March, that's
Alright, there. More. Let's get back to where we were. It's a princess, 9 years old. Well, she wanted to learn how to trade. Great. Try explaining cash secured puts to a 9-year-old. That was hard enough to explain to her the 5 rules. And it was 10. The reason why it's called the 10-minute trader was so that my 9-year-old daughter didn't have to spend more than 10 minutes in front of the computer. Because that's what, how do you keep the attention of a 9-year-old? Doesn't work that way. The profit is the call. You should say that. Mortgage Magician, thank you very much. Ooh, Big Brain, Plains All American. Big Brain, we did this last night, and you do the same thing with the other stock you keep asking me to take a look at. Plains All American, we looked at it last night. As much as you like it, what I don't like about it right here, okay? This, right there. The insurance policy, the call option. If I'm buying it at this price here, $16.91, I'm going to sell it at $17, and look what I'm getting, is 0. So I don't like the premiums on Plains All American or Energy Transfer, same thing, bunch of zeros, and AGNC, a bunch of zeros. So if I'm going to do a covered call on them, I'm not going to have the profit that I'm looking for. So not every single stock, even if you like it, is going to pan out to be a good fit. And that's why it's no. That's a no. Because it doesn't fit. Okay, Nikki Bay, how are you today? Kent, you helped me on my stock journey, and now I'm up 81% year to date. Cool beans. Nicely done, Mr. Kent. You're actually beating me. Because I think I'm up 60, 70%, something like that. But you're actually beating me this year. Nicely done. Hercules, a rope revision, what's going on? Lon Perry, we can't see it from here. Okay, so Lon Perry, oh yeah, didn't I just say that wasn't working? Hold on a second. It's supposed to be live on YouTube. That ain't it. That's it. Back to YouTube. YouTube is it. YouTube. All right. Now there's one, and there's the other one. So there's 2 live streams on YouTube. One is me standing in front of the screen, okay, and the other one is the screen itself. Okay, so just the screen itself, that way you'll be able to see all those little tiny numbers. Next, Mark. I still don't know what to do. Well, Mark, I'm not 100% sure if you're new here or if you've been here before. Okay, but I'm here every night, Sunday, Monday, Tuesday, Wednesday, Thursday. Now, I do take Friday night and Saturday night off. Last year, it was 7 days a week. Well, I got a little burned out about that, so this week I am taking 2 nights off. that being said, what am I missing? What am I missing? All right. Thank you there, Kent. Oh, so as I was saying, Mark, keep showing up, keep asking questions. All you got to do is, if you want, Mark. Now, I say this to everybody every single night. If you want, go into whatever platform you're on. Okay, whether you're on TikTok, whether on YouTube, whether you're on Instagram, whether you're on Twitter, whatever you are. There is a bio which will tell you everything you need to know about me. So, and there's a link there. You can send me an email. So send me an email or a text with your phone number. I will personally give you a call yourself. Me, personally, I will personally call you. And then we can talk about what it is you want to do. And I will promise you, 100%, I will not try to sell you anything. Nothing. Okay, all I'm doing is offering to help. Send me a phone number, I will give you a call, and we will chat. All right. How you get 100 a week? Not quite sure 100 what a week, Mark. $100 a week, 100 trades a week, 100 slaps in the face a week. St. Martin, what happens if you do a covered call and the stock drops 5%? Well, I hate to be the bearer of bad news, Mr. St. Martin. Take a look at this. Okay? Down, up, 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 down. That's all they do. They go down, they go up, they go down, they go up. That's it. Okay, if you like a good company, rule number 1, never buy something you do not want to hold on to long term. If it drops 5%, big deal. Okay, right here, $10.60. It dropped down to $7.80. Well, what kind of a drop is that? Okay, a 5% drop on a $10 stock is only 5 cents. That's it. You should start to worry when it goes from $10 down to $7. That's $3 drop, which is a 33% drop. Okay, then she went up, then she went down, up, down. That's all they do. They go up, they go down. The idea is to keep a good eye on where it is. Pick a good company that consistently increase their profits year after year after year. So if you buy a company and every year they give higher and higher and higher dividends, well, that should be just perfect. This here, what I'm teaching you now, is kind of like icing on the cake. So yeah, you buy the stock. Wonderful. You love it. Great. Joy. Okay? Now, every single year, if they're doing a good job, they will increase their profits. They increase the profits, great. You get more money. Isn't that what we're doing? But covered calls on a weekly basis. Not only can you collect the dividends, you can collect weekly premiums. And if you pick the right stocks, those premiums can be relatively nice. Okay, so for me, I don't look for dividends. Now, yeah, I use dividend stocks, and there's a reason why. Let me tell you why I use dividend stocks. Let's get out of here. Let's go right to there. Okay, this behind me is what is called an EX dividend calendar. EX dividend calendar. Basically, every single dividend stock, remember there was like 3,500 of them, every single one of them is represented by one of these little green dots. See them? All those green dots? Now, when it comes to dividend stocks, there's 4 dates to remember. 4 dates. Date number 1 is the announcement date. That's when they say, hey, everybody, this is James from Dividend Stock Talk. We made so much money this year. This is how you're going to get yours, and you're going to be so happy and wonderful. Okay, that's the announcement date. They just tell you what's going on. The announcement date, number 1. Number 2, very important, the EX dividend date. That, my friends, is the last day the stock trades before the dividend is paid. So if you want to collect a dividend on any one of these companies, oh, look at this, Apache, Clorox, Lowe's, nice. If you want to collect a dividend on any one of those companies, you have to buy it before the little green dot. Okay? Date number 3, the date of record. whoever owns the stock on the date of record is entitled to the dividend. Plain and simple. You own it on the date of record, you get the dividend. It's kind of like going to the store. You show up at a store and it says, we are open 9 to 5. You show up at 8:30, guess what? You ain't getting in. You show up at 5:15, guess what? You ain't getting in. It's plain and simple. If you own the stock on this day, the date of record, drawing a blank. If you own the stock on the date of record, you're entitled to the dividend. Plain and simple. That's it. Date number 4, the payment date. That's when you get paid. Now, why am I telling you this? Why is it important? Because the stocks that have dividends, that have consistently increased their dividends, they do it every 9 days. So, regardless at the beginning of the month, on the 1st, or whether you pay your dividend on the last day of the month, it doesn't look like anything's there, but there's 40 days. There's a little tiny numbers. There's 47. There's 47. Fit them all in here. So whether you pay on the first day of the month, the 1st, or the last day of the month, okay, there's over 3,500 companies all paying a dividend within a 90-day time frame. Think about it. Within a 90-day time frame, 3,000 companies are paying a dividend. And they do it every 90 days. The first quarter, January, February, March. Second quarter, April, May, June. Third quarter, July, August, September. Fourth quarter, October, November, December. We are in the 4th week of the first month of the 4th quarter. We got Friday. This Friday is the last day of the month, which means we have 2 months left to the end of the year. How are you guys doing? I'm doing pretty damn good, but, how are you guys doing? Alrighty, Zach Rachter. Greetings from Zach. Are you investing in XRP and XLM as recommended? No, I am not, Zach, because as far as I know, XRP and XLM do not pay dividends, and they do not have weekly options. So, no, Zach, but thank you. Kaden, how are you today? Hercules, thank you. User 86704 wants to take a look at Suncor, S-U-N. Surgical Innovations. I guess I was wrong. Okay, sorry. Sunoco. November, December, March, June. Terribly sorry, user 86704. I don't do monthlies. The numbers just don't work. Hercules, we already looked at VFC. Sally, we already looked at Verizon. Yep, we looked at Sun. We already did. Do you really have to pay the $9,000? Okay, G18. Do I have to pay $9,000 for what? I have no idea what we're talking about. Jamil, how you doing? Kendra is my name. How are you doing, Miss Kendra? Okay, when do you decide to open these contracts? Monday morning. Who's that? That was Jay Smooth. Jay Smooth. Okay, Jay. Monday morning. Dave Saint, good evening. Why are baby elephants so cute? Give me a second. I'm going to maintain my composure here. ETHZ. Carson, what's ETHZ? That's a hell no. Nope. ETHZ. Monthlies. I don't do monthlies. Simple question. Simple. No monthlies, please. Samron, James, Uber has no dividends. Did you change your strategy? No, Samron, I didn't change my strategy at all. Somebody asked to Uber, and I liked it. I said I didn't like it because they haven't been around long enough. That's me. Okay, Dooley Drama. Weekly options, not weekly dividends. Thank you. Jay Smooth, can you move the camera a bit so we can see the entire screen? There we go. Moved it a bit. All right, Jay Smooth. Sushi. Good evening, Sushi. Kate, Verizon. Kate, we already looked at Verizon. Okay, I don't want to look at it again. Charles, good evening, Charles. Serene Wave, how are you? Vincent, good evening. Mo, hey, so ASST just blew up recently, has high volatility right now. What are my thoughts? Hell no. That's my thoughts. Mo, what do you think? Was that quick enough? Hell no. I don't do stocks at a 50 cents. Okay, now, Mo, how can you tell me and have me believe that a company that was 50 cents a few weeks ago has 2 decades, 20 years of increased profits at 50 cents? 20 years. Yeah, no. Nope, sorry. Nope, nope, and nope. Ooh, Kane Adams wants to take a look at Micron. Hell, Kane, I said, do not show me anything at the high of the year. There's no opportunity there. None. Unless you want to do, puts and other things that want the stock to drop. I don't do that. I'm looking for positive to go up. QTBS. Michael, what is that? QTBS. QTBS. Okay. Michael, sorry about that, but we cannot find that symbol, which means it's not traded in the U.S. That's all that means. Thank you there, Kane. All right. Thank you, Kane. Sammy! Hey, buddy, can you check Coca-Cola? Gotta love Coca-Cola. They've been in business for over 140 years. Take a look. Okay, here's the high, here's the low, here's where it was, here's where it is. Look at this, down, up, down, up. What's going on? Well, let's check it out. It's currently at $70. The 70 is going for 51 cents. Sorry, dude, I don't do less than 1%. Okay, 1% of Coca-Cola, $70, would be 70 cents. Okay, 1% of $70 is 70 cents. But if the 70 is going for 51 cents, that's less than 1%. Now, don't get me wrong, 55 cents on a $70 stock, that's got to be at least 0.7%, almost 0.75%. Well, that's not bad. Was that 30% per year? If you're okay with that. Well, I'm not okay with it. I want 1% every week. This is less than 1%. So no, I don't do Coca-Cola. Mo, ASST, please, it's interesting. Yeah, I looked at it. I gave you my opinion. I said no. Okay, that's a no. Mo, it's really not that difficult, Mo. Okay? Company's got to be at least 20 years of increased profits. Okay? ASST, no. It's not there. I don't even have to look. Okay? Because if it was 50 cents 6 months ago, there's no way possible it can have 2 decades profits. Wild and out. How are you this evening? Space XXXX. Okay, hello. Gennard, what is one of your favorites? Macy's. Ooh, Kutchi wants to take a look at KView. KVUE. Interesting. Uh-oh. Yeah, Mikey's saying the same thing. Why would someone do a covered call if the premium is 0? You're absolutely right, Mike. Certain stocks, the premiums are horrible, so I just don't do them. I gotta go back here and see what kind of questions you guys have. Sorry, it's not that I'm ignoring you, it's I have way too many questions. Gina, yes, I'm selling covered calls. Thank you, Gina. Raining Cock, how are you today? Bivik, happy. When did you learn? Okay, I learned, oh my goodness. Well, actually, I'm in a constant state of learning. That's a good way of putting it. I'm in a constant state of learning. Let me think. When I got out of the service in 82, okay, I got out of the service in 82, I joined this guy doing museum exhibits. So when he left, okay, I basically took over the shop. And I made so much money, I had to figure out what to do with it. So I basically started, I believe, in 1990, 91, because I made so much money, I had to figure out what to do with it. Too small, can we zoom in? Okay, so 530380. Why couldn't your parents name you Bill? Bill's easy. 530380301838. Do they call you that every time for dinner? Yo, 30, yeah, whatever. Can we zoom in? No. Terribly sorry. Okay, this screen here behind me is live on YouTube, which means if it's live on YouTube, you can pick up the little phone that you're on, or laptop, or what do you call it? Tablet. Go in the other room. Throw the kids off the big screen TV. Say, hey, Daddy and Mommy want to look at the big screen TV. Okay, that's why it's live on YouTube, so you can see these little tiny numbers, because you can't see them on your phone. Okay, this is being recorded, so you can go back to YouTube and re-watch whatever episode you want to watch. Okay, there's over 1,200 different episodes every single night. Okay, for a very long time, I've been doing this exact same thing, teaching the exact same thing, the exact same way, the exact same words, the exact same stocks, because it never changes. Okay, think about it. Coca-Cola has been paying dividends for 140 years. 140. I just started this little venture a year and a half ago, well, 2 years ago. That's it. 2 years ago I started. Well, Coca-Cola is still making Coca-Cola. Okay. So, thank you, BP. That was nice of you. When do I sell? When it hits my target. Think about it. Okay, if I'm buying K-View at $15, right? So that's the current price, $15.08, right? I will buy it first thing tomorrow morning at $15.08. I will sell somebody the rights to buy it from me at $15, and I will pick up 33 cents a share. Well, that's a nice rate of return for 1 week, as long as the stock is above 15 come Friday. And if it's above 15 come Friday, guess what? Monday, I no longer have it. Someone else bought it, and I get all my money back. Think about that. If I buy it, $15.08, however many shares I buy, 1 contract, 5 contracts, 50 contracts, however many. Okay, if I sell somebody the right to buy it from me for less than what I paid for it, and then they buy it from me on Friday or Saturday, I'll get all my money back, plus I get to keep whatever profit that is. So for the fun of it, let's see what the profit on K-View would be. Okay, let's take a look at the chart. Okay. High, low, where was it, where is it? Look, it's sideways, down, and then up. That's it. Don't complicate it. Okay, well, you could do this. Up, down, up, down, up, down, up, down. Same thing, sideways, down, and then up. Basically, the overview, the big picture. All right, so it's at 15.08. Look at the last 30 days. What do you think? Okay, here's your 30-day high. She drops. Now she's going back up again. It's actually that simple. Adults, you people, have a tendency to make this more complicated than it needs to be. Remember, I showed you the picture of the little princess, 9 years old. Daddy, can you teach me? Well, yeah, I just wish adults were as easy to teach as my 9-year-old. It took me 15 minutes to teach her the whole thing. Rule 1, never buy something not on your list. Rule 2, never sell for a loss. Rule 3, make sure the company's profitable. Rule 4, weekly options only. And Rule 5, make sure the numbers work. What are the numbers? What am I buying for? 15.08. What am I selling for? 15. What am I collecting? 33. Well, that's more than 1%. It's actually that easy. And then you just get rid of this because we don't need it anymore. Then we're going to go to covered calls. Okay, look. Here's all the different trading strategies. There's a whole bunch. I'm only giving you one for free. One. And that's this one right here, the covered call. You buy the stock, you sell it. You buy it for a certain price, you sell for the exact same price, and you collect the premium. And if the premium's more than 1%, great. That's 1% every single week. More than 50% a year. Now, it takes me 5 or 10 minutes every morning. What did I buy? What did I sell against it? Where is it at now? Where does it look like it's going? And what should I do next? Now, it takes me less than 30 seconds to do all those 5 things. Did you notice when I look at a chart? 3 to 4 seconds. When I look at the numbers, 3 to 4 seconds. When I look at my order, look, let's take a look. Let's see how quickly you guys can do this. Let's get out of there. Let's go to there. Let's go to here. Let's go to there. And here we go. All right, so here's the order. Here's the stocks that I hold right here in this account, right there. Watch. I'll show you how easy this is. Let's move this over so we get to look at the chart because I want to see the chart too. All right, I want to see the chart too. All right, so HIMS. Let's take a look at HIMS. HIMS. Okay, right. First thing I want to do, right click, view trade. There it is right there, the 52 put. Okay, great. Cash secured put. The 52. Well, wait a second. That's not going to work. All right, there it is right there. Didn't work out. Okay, first, put the ticker symbol in here. Okay, here's the ticker symbol. The last 30 days, there it is right there. Last 30 days. All right. View trade. The 52 put back in October. The 52 is right here. That's it. It's a cash secured put. That's all. Don't have to do anything. Okay. November 7th. I got pushed out to November 7th. I don't have to do a thing. What did I collect? I collected $6.10 on a $52 stock. That's a nice fat premium. Okay, so the next one. Simple, 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 simple. Coles, here we go. Whoops, Coles over here. KSS, there it is. Whoops. Coles, KSS. There it is right there. Last 30 days, right there. And my trade right there. Okay, so I got 500 shares, 1638. I sold the 16s, I sold the 17s for November 7th. I don't have to do anything. Okay, and she's going up. Don't have to do a damn thing. That's how quick and easy it is. The next one, ooh, like this one, LUV, Southwest Airlines, LUV. There's the chart. That's what it's doing. Where am I? Here's my trade right there. Got 3,000 shares, 33. I sold the 3250s. I picked up 138 for October 31st. That's for this week. Okay? I bought it for 33.32. I sold someone the right to buy from me from 32.50. I picked up 138. I bought it way back at the end of September. Now we're into the end of October. So I've had it for four weeks. So every single week I got 1%, 1%, 1%, 1%. So that's 4% just on LUV for 1 month. So what's going to happen? 32.50. Well, it's currently right now at 32.25. What am I going to do? Well, more than likely I'm just going to roll it forward. How do you do that? Right here. You right click, create rolling order. Boom, there it is. Here's the number right there. Okay? I'm just moving it forward 1 week. It's not that difficult. It's actually very simple. Right now, let's get out of this. And let's go back to where we were. Okay, so back to some questions. So that's K-View, if you like K-View. So let's go back to K-View. Where were we? KVUE. The 15. So let's do the 15s on K-View, see what it looks like, and see if it makes sense. The 15s right there. One contract, just one. At the market, there we go. And here's Johnny. Buy one, covered call, K-View 100. That's the weekly. 31 October 25. That's this coming Friday. The $15 call option. Remember, I'm buying it at $15.08. I'm selling it at $15. Okay, I'm making a $26, whoop-a-dee-doo, $26 profit on one contract. One contract, $26. It's only $1,400. Now, it may sound like a lot. $1,400, I'm only making 26. Well, think about it this way. Hold on, let's get the calculator out. Okay. If my profit is $26, that's interesting. There we go. My profit's 26 bucks. Okay. To find out the rate of return, you take the profit and you divide it by the investment, 1474. Let's find out. 1474. 1474 gives me a grand total of 1.7% for 1 week. Now, I know 26 bucks is not a lot of money, but it's 1.7% of the investment. 1.7, we'll multiply that by 52 because it's 52 weeks in the year. So 1.7 comes to 91% for the year. 1.7. If 1% is 50%, 2% is 100%. Well, 1.7 is 91%. Imagine that, 91% for the year for a company that only take me 10 or 15 minutes to find. Well, how many stocks are there? Well, we looked, 10,700. That's a lot. That's a lot of companies. And out of all those 10,700 companies, only 3,500 have dividends and options. Well, how many have weekly options out of those 3,500? Well, I only like about 300. That's it. Imagine that, 10,700 different companies, and I only like 300. Because I only like companies that have 20 years, that's 2 decades, of increased profits. 20 years. Now, you may think that's a lot. No, it's not. Stock market has been around here, stock market that you know of today, 420 some odd years. 1602 was the first dividend stock sold. First dividend stock. A promise was made to share the profits with the investors. They went door to door, invest in our company, and we'll share the profits with you. That was the promise. Invest in our company, we'll share the profit. Now, that company, the Dutch East India Shipping Company, okay, went on for 198 years and averaged 18% per year. 18% per year for 198 years. That was the average. The highest payout, I believe, was 78%. I don't remember exactly what year it was, but, you know, is what it is. Okay. Faber, I found the IBKR campus. Which courses should I take to study that's better? I can't answer that question. I have no idea. Jonathan, 3 boats today. Yeah, Jonathan, I looked at 3. One of them was nice. Now, I really did like that one in Miami, that 92-footer. Can you imagine me on a 92-foot boat? A little impractical at the moment. I'd actually have to get all the kids on board to actually take care of that thing, because you need at least 4 people just to run that thing. It's huge. But anyway, the one we looked at today was 47, and that one I could do by myself. Fine. Anyway, we'll see what comes up, because I want to get it by at least December or January. That way we can take it for a couple of test rides around here before we do that 5,700-mile journey. 5,700 miles. That's a lot of miles to put on a boat. Michael, how are you doing? All right. Da-dum-dum. Lord No Face back again. How are you doing today? Steve Mag, how you doing? Miss Pontiac, the Sonic Bond. What's going on? Digital Marketing Guide. Hello. G8, thank you for that. Kate, I feel bad about this. ZDGE. What the hell is that, Kate? ZDGE. Let's get out of here. Oh, wait a second. Oh! Okay. I want to save this one. Remember how we saved the last one? There it is. There it is. Yeah. All right. And up there, and there. Okay. Down we go. And what did we say the rate of return? Wasn't it 1.7? It was 1.76. All right. So we're going to save this one. Where did it go? Where'd it go? Right here. Where did she go? I don't see it. That's not it. That's not. What is this right here? That it right there? There's hymns. We already did hymns. Which one are we doing right now? K-View. Alright, that's hymns. That's not K-View. Alright, I don't know what that one is. Okay, let's go back to here. Let's do it one more time because it didn't save. Alright. There it is. Alright. Right to there. Right to there. Right to there. Alrighty. Right there. There you go. Now, let's see if she saved. Right there. K-View, it's right there. And it's 1.7. K-View is saved. There it is right there. That's small, man. Whoops. There it is, K-View. Okay, 1.7%. All right, K-View. Whoops. All right, we got to find one more tonight. One more. We got 3%, 2.1, 1.5, 1.7. And you guys say you can't find good stocks every night. What's the matter with you? All right, anyway, that's K-View. What do we have next? ZDGE. What is that? ZDGE. Never heard of it before. ZDGE. Zedge Incorporated. Hell no. Okay, so Kate, why do I say no to that? November, December, January, April. These are months of the year. Kate, I can only do those once a month. So if I'm making 1 to 2% every trade that I do, because that's all I'm looking for. I want to get in, I want to get out. I'm not looking to hit a home run. Okay, I just want to get a small slice of the pie, 1%, which means I do it on a weekly basis. So if I'm doing a monthly, it means I'm getting 12 to 24%. It might be working for you, but that doesn't work for me. I like weeklies, which gives me a lot more money. Holy cow, 1031. Let's answer some questions because we got a whole bunch. Holy shnikey, you guys got a lot of questions. All right. BP can't see the screen. All right, it's live on YouTube. Can we zoom in? BP when you sell, but tomorrow, buy tomorrow and sell tomorrow. Friday, yep. Cadence. Oh, wait a minute. Chad Kane? How you doing, Chad Kane? I really respect you. Thank you, BP. Barefoot Bandit. Hello, hello, hello. Can we please review AT&T? Why? Why do we want to look at AT&T? Why, Mr. Santa Claus? Why? Okay, you guys just gonna... Okay, so Zcash Miner. Halloween. What is that? Okay, so let's take a look at AT&T. Okay, here's the bottom. Here's the top. Okay, up, down, up, down. What's going on here? That looks like 2 days to the top, doesn't it? Oh, look at that. 25. The 25s are going for... Hold on. 59. Oh, yeah, 25 50s. 34. Nice. Oh, who came up with AT&T? Any content category. Okay, interesting name. Okay. Down, up, down. Here's your 30-day bottom, 30-day top, bottom. Now she's going up. Here's your 1, here's your 2. I'm still looking for one more day. Okay? Because 1, 2, 3. Yeah, that's good. 23.50. 25.50. 25.50 is going for 34. So let's see. What does AT&T look like? Why not? Why not AT&T? We all know who they are. Get out of the way. Get out of the way. Covered call. The 25.50s right there. One contract. There it is. There you are. There you are. And here we go. Buy one, covered call AT&T, 31 October, 25.50 call option at the market, blah, blah, blah. 33 is the profit, 25 is the investment. What is the rate of return? And Do we even like AT&T? Is this something you want to buy, hold, and keep getting weekly cash flow from? I don't know about you. I like AT&T. Calculator. $33 is the profit. The investment, $25.17. Grand total of 1.3. 1.3. What's 1.3? 1.3. AT&T. Nice. I'm liking this. I'm getting the hang of it. Okay, give it a second. Come on. Okay, that didn't quite work the way I wanted it to. Okay. Come on. One more time. There it is. Where's AT&T? There it is right there. AT&T. Someone said they couldn't read it before. You couldn't read it before, huh? How's that? Can we read it now? AT&T. Buy one covered call. AT&T. 31 October 25. The 25.50 call option. Here's the profit. 33. 2,500 is the investment. What does that come to? That comes to 1.3%. 1.3%. All right. Now we're going to put it with these. All righty. All right. So we've got 1.3 AT&T, 3% for Marvel, 2.1% for Altria, 1.5% for Uber, and 1.7% for K-View. That was just today. That's just what we found today. All right, so let's see what other questions we have. Okay, 10:35. We got lots of questions. What stock are you evaluating now? Jose, that was AT&T. Let's keep on going. Halloween, crypto mines. I don't do crypto. We already said about it. Sammy, yeah, let me give you some close. Never day trade. Don't buy options. Just do good, sound investing. Thank you, Sammy. I think so. James, you are helping a lot of starter traders. Yes, I am. Thank you. Halloween, Bitmain, Antminer, Z15. One of these produces $40 a day. Okay, thank you. If you have a room full of 20 of them. Okay, not quite sure what we're talking about. Crypto. Did he just create a covered call? Yes, I did. Better yield in crypto. Yes, but see, the funny thing is, Everstretch fixed variable 10% a month. Okay, so Halloween thinks crypto is a good idea. Now, Halloween, I'm going to agree with you and disagree with you at the exact same time. Let me see if you make sense out of this. You ready? Hold on for a second. All right, so Halloween, here we go. As much as we're not going to be able to escape cryptocurrency, which means, I don't know if you remember this, but years ago, decades ago, you had two choices and only two, cash or check. That was it. Okay, I don't know if you remember that far back. Some of you can, some of you can't. You had two opportunities to pay. That was it, just two, cash or check. And then, lo and behold, they came up with a charge card. Cash, check, charge card. That was it. And as time progressed, cash, check, charge card, PayPal, Venmo, Zelle, and then a few others. That's 6. So what's cryptocurrency? Cash, check, charge, Venmo, PayPal, crypto. It's just one more choice of way to pay for your stuff. Now, the thing is, I don't trust the government as far as I can throw them. If you do your research, okay, World War I veterans weren't given pay. That's where, what do you call it, back during FDR. After World War I, the veterans weren't paid, and the government screwed them out of all that money. Then the government went and turned around and said, all right, you cannot own gold anymore. Can you imagine that? The government says you cannot, it's illegal for citizens to own gold. Turn in all your gold. This was back in, I think, in the 30s or 40s. So, like good citizens, everybody turned in their gold. A couple months or years later, the government said, all right, you can now buy gold. However, you turned in your gold at $20 an ounce. Now you can have gold again, but it's going to be $30 an ounce. You just lost a shit ton of your money because the government decided to do so. And what are they doing now? I wouldn't trust the government. Look at the history of the U.S. government. They're not that nice to us. Think about it. So crypto, although we're not going to be able to escape it, because if you didn't know, okay, old Jojo already signed, or was it Barack? One of the boneheads signed the Digital Currency Act, which means all of your money is going to be changed to digital currency. So if you don't use it, you will lose it. That's one. If you do something stupid, they can turn it off. Now, remember what they did in Canada a year or so ago? They actually froze the money of those truck drivers because they didn't agree with what the truck drivers were complaining about. You complain, you do something, we're going to turn your money off. That's exactly what they did in Canada. That's exactly what they're going to do here in the U.S. So yeah, I don't trade crypto, but I'm going to create my own because, you know, I'm doing this, I make plenty, so I can actually create my own crypto and use that. That way the federal government has no way of getting into my money. So no, I don't trade crypto because I'm totally clueless, but I'm going to be having my own because I don't trust the government. They call it decentralized finance. If you have enough money, you can create your own money. Because we can nowadays. We couldn't do it before, but we can now. So yeah, now I don't agree with what you're saying because, you know, I don't know anything about crypto. All right, but I do know it's an alternative way of payment and the government can't touch it. But here's the thing. Most crypto has nothing behind it other than a wink and a nod from some guy at the other end of the computer, which you don't know who the heck it is. So I don't do crypto. So, you know, and I haven't seen a single crypto yet that has weekly options that allows me safely, predictably, and consistently. Because you cannot tell me the crypto market is safe, predictable, not. So you're probably asking yourself, why am I getting into it? Because I'm being forced to, that's why. Raven, Orion, how you doing? Franklin, how you doing, Franklin? Mar, thank you there, Mar. Franklin, bro, no lie. You layman the heck out of this for us. Thank you. All right, Franklin, you're welcome. Mac Jones, how you doing? Eagle 18. So 3,000 stocks have weekly options and dividends. No. That's not what I said, Eagle 18. What I said is 3,500 companies have options and dividends. How many of those 3,500 have weekly options? No, I don't know. But I only look at about 300. That's about all I look at. So do you buy the shares first, then sell the covered call? Actually, Gina, I do it all at the exact same time. Okay, buy the stock, sell the covered call. Yes, Eagle 18, yes, I still paper trade because I come up with ideas all the time and people suggest things to me all the time. And I don't want to throw real money at it, so I paper trade to see if it's accurate and see if it works. And if it does, maybe I'll try it. Larry, so in a nutshell, you don't do puts for the sake of simplicity. Larry, I do some, but I'm not teaching them here. And you're right, simplicity. I love my daughter, I do. But trying to explain something to her that most adults don't get was hard enough as it is. You start throwing in puts. Puts are extremely confusing if you don't understand them. Merv wants to take a look at Cisco. Now, I believe the Cisco you want to look at, Merv, has monthly options, I think. SYY, Cisco, monthly options. Yeah, there's two Ciscos, CSCO and SYY. This Cisco here has monthlies. I don't do monthlies, Merv. Okay? Monthlies just don't pay the same, and they're a lot more effort, a lot more aggravation. Mike Sweeney, why would someone do a covered call with a premium of 0? Okay, Mike Sweeney, I'm going to agree with you 100%. I am. There's several companies, although the charts may look good, let me show you just a few of them. Okay? Now, some of you guys like these companies because you think they're good. All right, well, nothing wrong with them. Energy Transfer. Look at the chart. Doesn't that look nice going up? But look, covered stock. Wrong one. Single. Okay? 0.00019. That's horrible. Okay, AGNC. Uh-oh. AGNC. This is 0.00000. I don't do stocks that have 0 premium. It just doesn't make sense. And I have no desire to do this, to sit in front of the computer all day long watching that thing. I want to get in, I want to get out, I want to be done and over with in 10 or 15 minutes. Because that's what it was called. Anytime you see a video from me, hey everybody, my name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader. Which means you should be able to trade your whole account within 10 minutes. That's it. You just change your morning ritual. You get up in the morning, brush your teeth, do your hair, do your makeup, take a shower, whatever, have your breakfast, sit down for 10 minutes and take care of your money. Most people spend more time on a family barbecue or a weekend out than they do on their personal finances. And then when you get to 60 and you want to retire, it's like, where's the money coming from? It's got to come from somewhere. Think about it. Okay, my house may be paid off, but I still have insurance. I still have taxes. I still have maintenance. It's still got to be taken care of. And no, my house is not paid off. I got a mortgage to the hilt because it's the last tax advantage, well, one of the last tax advantages that the regular person has. And keeping your money separate from your house, it's just a wise decision. Because here's the thing, you pay off your house, guess what? You get hurt, you try to refinance, get that some money out. Ain't happening. Ain't happening. You can't, if you, yeah, no. There's a whole bunch of different thoughts behind that. Okay, you get those people say, pay off your house, it's great. No, it's not. It's a horrible thing. That's like having a checking account or savings account that you can't access. Because think about it. Whatever your house is worth, you cannot go to Dunkin' Donuts and buy a cup of coffee with the equity you have in your home. But here's the funny thing. The equity you have in your home, well, you can borrow against it. What's the rate nowadays? 4.5%, 5%? And if you can make 20, 30, 40, 50% per year, why the hell not do that? And keep the money separate from your, that's getting on a different topic. But anyway, yeah, mortgage to the hilt, that's my opinion. That's what I'm going to do. Okay, in January, I'm going to mortgage the house to the hilt, jump in a boat, float around, and just make the payments. Because if I'm getting 50% a year, I got no problem whatsoever borrowing mortgage money at 10%. None. No problem at all. But don't you guys do it. That's not advice. That's something totally insane. Well, I've been doing this for 30 years, so, it's okay for me. But for you guys just starting out, take your time. Paper trade. Learn first. Find a good strategy. Something that works for you. Not only the time factor, but the rate of return and the risk involved. Yeah, this has very minimal risk. Because I am only buying good quality companies. I'm buying them at whatever the price is, $10.30, then I'm going to sell them for $10.30. I'm not doing this one. Not that one. Anyway, let's keep on going. Simple and smart way to invest $1,000. RM1991. I know nothing about you. I cannot give you advice. I can't, because I have no idea what it is you're looking for. So I can't say buy this and you say, wait a minute, that doesn't make any sense to me. So I know nothing about you. If you really want my opinion, send me your phone number. I personally will give you a call. Okay, let's keep on going. Let's keep on. T, what's going on? T. Alex, I'm paying $5,000 to the first. Alex, I hate it when you do that. I really do. St. Martin, what happens if you do a covered call and the stock drops 5%? Do you sideline that money? No. Okay, here's the thing. All right, let's find a good one. Ford. No. General Motors. No. AT&T. Sure, why not? AT&T. All right. AT&T. Here's the high. Here's the low. Here's where it was. Here's where it is. Okay, so let's just, go through this for a second. So last year we're at $22. She shot up to 23. Now from 22 to 23 is only $1, which is 5%. So it goes up 5%. And then it goes from 24 down to 22. $2. $2 on a $24 stock is a little around 10%. So here's the thing. She shoots up, she pulls back. What do? You don't sell. And then she shoots up, she hits 25, pulls back to 24. That's $1. $1 and $25 stock is about, wow, brain's misfunctioning. But she goes up, she comes down. You want to sell, take that loss, that's up to you. I refuse to take a loss. Because rule number 1 is never buy something you do not want to hold long term. So, St. Martin, if this thing it's a high of the year of 30 and a low of the year of 20, okay, the difference between 30 and 20 is 33%. 33% between there and there. Not 5%. Stocks go up, stocks go down. They go up, they go down. They go up, they go down. They go up, they go down. The idea is to always pick a good company. As she drops, fine. Then you have a choice. Do I dollar cost average? Do I roll it forward another week? Do I drop my strike price? There are a lot of things you can do. But if you stick to the rules, never buy something you don't want to hold long term, well, look at AT&T. Okay, she was down $20. And she shoots up to 29, drops back down to 26, shoots up to 29, drops down to 26, shoots up to 30, drops down to 26, shoots up to 27, drops down to 25. And what do you think it's going to do next? Well, it's going to shoot up, it's going to pull back. It's going to shoot up, it's going to pull back, because that's what stocks do. Now, we're doing weekly, so yeah, you're going to feel it a little bit differently than before you came here. Because before you came here, most people bought a stock and only got the dividend every 90 days. That's once every 3 months. Once here, once here, once here, and once here. 4 times a year. Well, now you have the opportunity not only to collect the dividends, but to also collect some kind of a premium on a weekly basis. So if I buy it at $25.53, I sell somebody the rights to buy it from me at $25.50, I'm collecting a nice premium, like 1.5%. Well, great, that works. Well, as the stocks go up, I may sell it or I may roll it into the next week and pick up another premium. And then every single week I have a choice. Do I keep it? Do I roll it forward? Do I let it go and pick up something else? Because it goes up, it goes down. It goes up, it goes down. And guess what? There's 10,700 other companies doing the exact same thing. Go up, go down, go up, go down. Every single one does the exact same thing. They go up, they go down, they go up, they go down. All looking for the same thing. To be profitable, to give back to the investors some kind of rate of return. Well, that's what we're looking for. Well, it's 10:53. Let's get some more of these questions. More questions! On your Uber example, do you rely on, or do you really have to pay $9,000? What was the Uber one? Hold on a second. I'm a little lost on the Uber one. What's this one? AT&T, Marvel, Altria, Uber, right here. Okay. So here's the Uber trade that he's talking about. Okay. Buy one covered call Uber 100. That's the weeklies. 31 October 25. That means it's expiring this week. The $96 call option against the stock at the market to open. That's the trade. Okay? What is it costing? Well, the cost of the trade is $9,400. So to answer your question, yeah, you got to buy the stock in order to do a covered call. It's an investment. That's what we're doing here. We are investing. And when we invest, you got to spend the money, or you have to invest the money. It's the same thing. So if I'm investing the $9,000, okay, my return is $142 for the week. If the stock is above, where is it, 96, come Friday, well, I get all that money back, and I get this, and I get anything else different that I'm looking for. So it's just an investment. Okay, so if you're going to buy a house, you are going to put money into it before you can get the monthly rent. Okay, if you buy a car and you want to rent out your cars, a lot of people do that. They buy a nice car and they rent it out. Well, great. You still got to dish out the money in order to get the investment return. Yes, but do you sideline that money for the covered call? Why would I sideline that money for the covered call? It's profit. Okay, this profit here, where is it? Right there. I use that, I use that to pay my bills. How do I get rid of this thing? Oh, here we go. Nice. Okay. Bring it back. Oops. Bring it back down to right there. All right. Johnny Boy, where do you look to see if stock pays dividends weekly or monthly? Johnny Boy, that would be the CBOE, Chicago Board of Option Exchange. Angel Franco, how you doing? Veterinarian doctor, how are you? Daniel, how are you? Oh, I missed a bunch. All right. Martin Tiller, what's your opinion of combining a covered call with a protective put? It works, if that's what it is you're looking to do. I don't do protective puts. Some people do. I don't. Digital marketing guide. There's always somebody asking me about this stupid stock. Always. Always. So, nope, this one right here. Okay. So, NVDY. Now, NVDY. Now, he's saying NVDY has 100% dividend. What I do is I want to check and verify data. Finance. I'm going to look at data for yield max NVDA, $16.22. Let's take a look historically if he's correct. Okay. So what other questions do we have? Simple, you got that right there. Kevsta, how you doing? Miss Pontiac, good evening. Thank you. Okay, there it is right there. All right. I want to check out historical prices and all history. First thing I want to do, click right there, right? Dividends only. Now, there's a reason why digital marketing take a look at the dividends only. Because as a stock, they got two choices. Take the profits, give it back to investors, or take those profits and put it back in the company. So you're saying NVDY paying out 120% annual. Now, think about that for a second, because you're probably excited about the 120%. Well, let me give you this for an idea. Let's just chew on this for a minute. let's say my company makes $100 million a year profit, 100 million profit. If I make 100 million profit, how the hell am I going to pay out 120 million to dividends? Think about it. If the whatever it is, how could they give out more profit than they make? Because a dividend is a portion of the profits. And you're saying they're giving out 120% dividends annually. So if I make 100 million profit, how can I possibly pay out 120 million? Numbers. Now I want to look at all the dividends, maximum. Okay? I only have one minor problem in NVDY. The company's only 2 years old. Okay? June 7th, 2023, the very first dividend. Okay, so the other problem I have with NVDY, are you ready for this? First dividend, 74. The second one, 95. That's higher, correct? That means they're making money. Well, the third one, that's going backwards. 93, that's higher. 67, backwards. 41, backwards. 50, 62, 266, 260, backwards, 119, backwards, 256, 247, backwards, 125, backwards, 135, 110, backwards, 102, backwards, 118, 89, backwards, 82, backwards. This thing goes backwards more than it goes forwards. So, explain to me, if you will, right? How much dividend pay out? Didn't they pay? That was 2024, March 2024, 62 cents. The last dividend they just paid out, 12 cents. Explain me. You think that's a good deal? $2.62, the highest dividend they paid. Well, now they're paying out 12 cents. And you think that's good. Well, if 12 cents is 120% of their profits, a couple of years ago, their profits was $1.62 per share. Now, it's 12 cents per share. And you think that's good? I don't care what number they put behind it. Those numbers are going backwards. Those numbers are going up, down. Yeah, no. Terribly sorry, digital market. I'm gonna argue with this one. I really am. Take a look at seriously. Take a look at the numbers. 12 cents. Okay, last year it was $1.62, $2.62, $2.62 last year, and the recent one 12 cents. And you think that's good? Hell no. Hell no. Holy cow, we're past 11 o'clock. So let me breeze through these really quick and see what we have. I'm not going to get through all these questions. Thanks, Bruce. TD Tech, thank you. Felix, how are you today? Felix, we already looked at Verizon. We did. See my page. How William. Free. Okay. See my page. Dividend stock talk. Yep. Big Mac. You wouldn't get the dividend, but you would still get the weekly. Exactly. I'm not looking for the dividend, Big Mac. Okay? I'm not looking for the dividend. I'm looking for the premium. There's a in the two. Dolly Chad. Mini-Me from 20 to 30 is 50%. Yeah. But from 30 to 20 is 30%. 33%. I was saying mini-me. From 30 to 20 is 33%. Crypto Bull, how are you today? Oop. Jihu, can't understand. Keep coming back. He's talking options. Golden Nugget. Thank you, Kate. Well done. Uh-oh. Mary has Coney. How are you? Can you, sir? Can you DVLT? No. Mary wants to take a look at Coney. You're going to find the exact same thing with Coney as you just found with this one. All of them. Oh, that October 23. Do you see that? 20. Kate, I don't know if you saw mine. And off. Hold on, Kate. Okay, so same thing. Okay. Coney is now. Okay. Fine. Okay. Coney is also good. All right, let's take a look at this one. Very first dividend, 2 years ago. 107 down, 46 up, 169 up, 107 down, 166, 79, 122 down, 169 down. So that's okay. Down, up, up, down, up, up, down, down. It's like not consistent. Where are we? 222, 279 is the highest. Down, down, down. 111 up, up, down, down, up, down, down. You tell me that's good. The profits are not consistent. Hold on. I'll show you what consistent should look like. Look at that 31. Ready for this? All right. I want consistent profits for 2 decades. That's 20 years. That's 2005. 2005, 8, 9, 10, 11, 13, 15, 20, 28, 31, 36, 9, 42, 46, 51, 56, 62, 68, 75, 3. Did you notice? Every single one of those was higher and higher and higher and higher. Big Mac, same thing. ULTY, TLY, same thing. Not consistently profitable. Not 20 years old. No, thank you. Okay, you invest your money the way you want to. I invest the way I want to. I want a company that's consistently profitable. Plain and simple. Every single one you named off is a no. Red Dead. SYY monthly. I don't do monthlies. The numbers just don't work. Okay, we're past 11 o'clock. They base their dividends on call options. Yeah, Mary, I understand that. But there is such a thing called profitable and not profitable. Okay, if the profits are decreasing, that means the profits are decreasing. Go to the stock historical data, then change it to dividends and max time. All right, I just did this one, Kate. All right, RITM. It's past 11 o'clock. I'm usually done at 11, so I'm going to call it a day. You guys have a great night. Did you see Amazon is laying off 30,000 people tomorrow? Okay, I don't have a problem with that. I'm not doing good. Sorry, Eagle 18. Sorry about that. Mac, thoughts on Coca-Cola. We already looked at that. Kate, no, I was helping someone else. Thank you there, Kate. I appreciate that. Mary, thank you. I learned a lot from you. You're an excellent teacher. Oh, thank you. Oh, Kate, Wen and Hoft. Ugh. I never heard of either one of them. I feel bad about WEN. What the hell? Oh, Wendy's. Oh, okay. Hold on a second. Wendy's. What about that looks appealing? Now, to me, Kate, what looks appealing is this right here. The bottom of the year. Okay, because you cannot, I repeat, you cannot buy lower than the bottom of the year. And we all know to make money in the stock market, you buy low and you sell high. Well, here it is, invitation, the low of the year right there, if you like Wendy's. Okay, so Wendy's, the high of the year was 20.46. The bottom of the year, which was last week, was 8.49. Well, here's your last 30 days. And that's pretty plain to see what it looks like it's doing next. Take a look. Okay, up, here's your 30-day high. Here's your 30-day bottom. Shoots back up. Now she's coming back. 1, 2, 3, 4. 4 days. If you really like Wendy's, wait for a new bottom. It's coming. It's dropping. Wherever the new bottom is, it may be tomorrow, maybe the next day, maybe the next day. If you really like Wendy's. So Hoft, H-O-F-T, what the heck is that? Hooker Furnishings. Hell no. Sorry, I don't do monthlies. November, February, I don't do monthlies. I can only do it once a month. And that means I don't earn as money, and that just doesn't work for me. Sorry, Kate. Thank you, thank you, thank you. Bullish Boxer. Hi, could you check A-E-Y-E? Why? Why would I check that? I've never heard of it. A-E-Y-E. Hell no. See that? Monthly. No, I don't do monthlies. Plain simple, no. Are you a day trader? No, I'm not. Dang it, I'm trying to find weeklies. Kate, it's simple. C-B-O-E. Oh, here we go. Watch this. You'll like this one. Down, 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 down. C-B-O-E.com. Chicago Board of Options Exchange. They'll tell you every single option, every single stock that has a weekly option on it. CBOE.com. All right, I'm done for the night. You guys have a great day. And we're going to do this all again tomorrow. Yay! I'm Mike from the USCSO. You know about that stock very soon, my friend. I probably won't. All right. Done here. You guys have a great night. See you all tomorrow. Tomorrow. I love ya. Tomorrow. You're always... Did you get my message from me and my 6-year-old? I sent a second one. Ooh, Kate, no, I have not seen it yet. Did you send it here? On TikTok? Here, on TikTok. Hey, Club Med Tom. How's it going? Let me finish signing out of all this. Sign out there. Signed out there. Signed out here. All right, signed out and here. You guys have a great night. Kate, I'm going to double check and see if it's on there. Out of here. Oh, 245. Wow. Guys, have a great night. From your website, but I still sent it here. If you rather, yes, I would rather you send it here because I check this 2-3 times a day. And now the end is near, and so I face